Silver rebounds from $2 weekly plunge, gold price near record Friday finish. Silver and gold prices both rallied from sharp falls in London trade Friday, recovering from 6-week and 1-week lows respectively in dollar terms as the US currency trimmed its strongest gain in 3 months, and Western stock markets also bounced with bond prices. Gold dropped near $2,000 per ounce before regaining $17 to set its third highest ever Friday finish in London in dollar terms, while edging a new record weekend level in euros above €1,855. The silver price had earlier fixed at midday around $23.85 per ounce, down $1 from noon Thursday and $2 below last Friday's London benchmarking to show its steepest weekly plunge since October. Silver then reduced that 7.7% week-on-week price drop, rising back to $24 in spot bullion trade. The dollar index meantime held on track for its sharpest week-on-week rise since mid-February, when minutes from that month's Fed rate rise meeting backed what Chairman Jerome Powell had said after that decision, that ongoing interest rate increases will be appropriate, and I don't see us cutting rates this year. While all but 0.2% of betting on year-end Fed futures still sees the U.S. central bank cutting rates by Christmas, the consensus forecast according to the CME Derivatives Exchange's Fed Watch tool has now risen to 4.49%, up nearly 10 basis points from last weekend and sharply above the one-month low of 4.19% set on Thursday last week. That day saw gold prices spike to a new spot market record of $2,078, and silver touched a 13-month high at $26.14 per ounce after the Fed raised rates to a ceiling of 5.25%, but said monetary policy will now be data-dependent. Precious metals, and especially silver, have near-perfect conditions for the ongoing bull market, said analysis from U.S. financial giant Citi as silver hit $26 per ounce in mid-April, projecting another 18% jump to $30 per ounce in the coming months. With silver's year-to-date average rising 6.3% so far from 2022's annual price amid the U.S. regional bank and Credit Suisse crisis, there's a lot more room to run, said Mike DiRenzo, Executive Director of Industry Association the Silver Institute earlier this week, but for global demand, it's going to be hard for 2023 to get to last year's record level. As of now, we're getting a much-needed pullback, but everything is pointing up medium-term /long-term in gold and silver, said US coin and bar retailers spread money amid Thursday's plunge. Euro gold prices today rose towards a record high Friday finish above €1,855 per ounce as new data said annual inflation in France and Spain last month came in as analysts forecast at 6.9% and 4.1% respectively. The UK gold price in pounds per ounce also rose, recovering a dip below £1,600 to head for its fourth highest ever weekly finish at £1,612 after the Office for National Statistics said the UK economy shrank 0.3% in March but grew 0.1% across the first quarter of 2023 as a whole. With the European Central Bank's Christine Lagarde repeating yesterday that inflation across the 19-nation Eurozone remains too high for too long, the Bank of England forecast on Thursday that UK inflation currently running in double digits won't fall to its 2.0% target until 2025. Following yesterday's UK rate hike, both the BOE and the ECB have now raised the cost of borrowing to the highest since 2008 at 4.50% and 3.75%. With US rates now rising from 0% at the start of 2022 to the highest since 2007 at 5.25%, the banks that have failed have had some very unique characteristics that have made them vulnerable, said US Treasury Secretary and former Fed Chief Janet Yellen in an interview with Bloomberg today, also warning Republican politicians that the only good outcome in their standoff with Democrat President Joe Biden over the federal U.S. borrowing limit would be to agree to raise it from the current $34 trillion so as to avoid the government of the world's largest economy defaulting on its debt.